Greetings. My name is David Scaysbrook. I'm the managing partner of Quinbrook Infrastructure Partners. We are a specialist investor in renewables, low carbon energy infrastructure, storage, and grid support. And we operate predominantly in the UK, the US, and Australia. We've seen in the last few years is a significant increase in volatility, not just from a pricing perspective, but also the way in which power markets reconcile their supply and demand. And that's for a variety of reasons. Firstly, depending upon which power market we're in, we're seeing significant capacity in older coal and gas plant being taken off the grid at an accelerating rate, which we've never really seen before. And that's sort of leaving sort of big chunks of capacity sort of disappearing very quickly. Some of that's been anticipated, but it changes the way the grid works in many ways. And so there are, if you like, unintended consequences of that, but we're going to see more and more of that. At the same time, we've also seen a significant increase in the amount of renewable energy capacity, particularly weather-dependent renewables, particularly wind and solar, that are variable according to the natural resource of the wind or the solar radiation at any given point in time. So we have these big blocks of baseload power disappearing, and we have more weather-dependent renewables coming in to replace it. And that renewable energy varies by the minute, depending on cloud cover, wind conditions, and can also be zero, as we know. When a very still night, there's no wind, no solar. And the final factor, I would say, is we're seeing power markets having to accommodate lots of smaller, decentralized sources of supply. So rooftop solar being a good example of that. So we're seeing more distributed supply options coming into the system, and regulators are also condensing the time periods over which power is traded. So we've gone from hourly markets to half-hourly markets to 5-minute markets. So when you throw all of that in together, we're seeing very significant increase in physical supply demand volatility and variation, but also in the way power is priced and traded. Constant human control. That's our view. So I think storage, like a lot of new innovations in a very traditional market, sort of split the audience initially between a fanciful, exaggerated phenomena to those who saw it as is incredibly fundamental and game changing. So you could sort of split the audience down the middle in the sort of 2016, 2017. We always fell into the camp of, yes, it's nascent, but like every other kind of moonshot venture, where it starts, certainly no indication of where it's going to finish or where it's going to evolve to. And now we're starting to see that there's so much money and human ingenuity being applied now to battery storage, even today compared to 5 years ago, that you would be completely naive to assume that that's not going to generate some incredible breakthroughs, right, between, say, now and 2030. And so the early movers in that space have been those that have more embraced the market opportunity created by the teaming of battery storage with renewables than necessarily picking a particular battery technology. So it's incredibly exciting. We're going to see a lot of evolution, not only in battery chemistry, in the number of applications for batteries. There isn't just one. There's probably a dozen different ways you can use a battery for value in power systems. But there'll be many new entrants coming in to the market. It'll be the majority of where capital is being allocated in the future, but we're still very much only at the beginning.